Welcome everyone. On today's video, we're going to quickly get into why I just bought more of United Health Group. Not only did I buy this dividend champion, I actually increased my average price on it. That's how much I like it. Mentally, it's hard to keep buying a stock when it continues going up and up and up. If we take a look at the year chart here, I bought in the 470s, I'd want to say, a little bit earlier last year, and it's done okay. It's in the 520s now, but it's very hard mentally for me to average up in my overall price in buying a company. I think a lot of you have the same mental hurdle. It really shouldn't matter if the numbers keep improving. The stock keeps getting better and better. It should go up. You should keep buying it if you believe in it. And here's why. Here's the numbers that take the emotion out of it for me, okay? So we're just going to look from a couple years back, 2020 to current day. Total revenue goes up every year. I would call this actually pretty significantly, and the trailing 12 months much higher. Not only is the total revenue up, the most important thing is the gross profit. They don't dip even for a year. Quarter over quarter, things can go up and down, but yearly this thing is a compounding machine, and that's why I really like it. And anyone who watches my videos will know that I love to see overall shares go down. And yet again, we don't see a year where the shareholders are getting diluted. They keep going down and down from 961 down to 941. This is significant. This is meaningful. This isn't to the likes of Apple, like the way they do share buybacks, but this really makes me feel good as a shareholder. I just want to take a quick look at the dividend history for this company because it's very important to us dividend investors. Now, anyone familiar with this company knows that it's a very low yielder right now, paying just under 1.4%, but the payout ratio is really good at 32%. So there's absolutely a ton of room to increase that dividend going forward. And if we take a look into the past, we can see that that is exactly what they've been doing, really increasing it well. If we look back here till 2021, a 16% raise, then a 13, then a 13 again, and we have another raise coming up. It should be 1, 2, 3, 4. Yeah, next quarterly earnings, we should be getting another raise, which is really exciting. So overall, these are some quick reasons why I really like this company, why I've added to my position size in it. Now, a lot of you are going to take a look at the chart. Those of you who don't really follow this company, you're going to look at the chart and say, well, why did it fall off a cliff? Well, the earnings just came out, and just to quickly sum it all up, the people that they insure use their services more than anticipated. That is about it, okay? You guys can look into the numbers for a little more clarity on that and what management had to say, but they did say that, you know, going forward there's probably going to be more claims as well. However, they reiterated that in 2024 they do expect to hit their earnings estimates, so it's all accounted for. There really doesn't need to be a freak out like this. It dropped around 5% at one point in the day, and I picked it up at a when it was 4.5% down. I thought that was pretty ridiculous. So, you know, we're talking a percent here and there. It doesn't really matter in the long run. It's a great company. If I had more money lying around, I would still be buying it now at $5.21 per share. I think that is a reasonable price to pay, a reasonable PE on a great dividend champion, and one I'm looking forward to getting my next raise from. All right, guys, check in the next video. Thanks.